The fiat mafia is at it again. What's up, everybody? My name is Joe Brown, and this is Heresy Financial. You know, I get asked quite often why this channel is named Heresy. Well, the definition of heresy is a belief or opinion that is profoundly at odds with what is generally accepted. And today we are talking about the new tax deal, the G7 tax deal that proposes imposing a 15% minimum tax on large multinational corporations. This tax would be global in nature, meaning no matter where they are in the world and no matter where they do business, they wouldn't be able to escape the minimum tax. And if you look up any article, any research, any information about this on any legacy or mainstream news outlet, you're only going to find one thing. And that one thing that you will find is praise, support, and encouragement for this proposed tax deal. And so as I do on this channel, I'm going to present an opinion that is profoundly at odds with what is generally accepted. And we're going to look at 12 things you need to know about this global minimum tax. Ready? Let's dive in. Over this past weekend, the G7 met together and came upon a monumental and a landmark move to agree upon a tax deal that would impose a 15% minimum tax on large multinational corporations. The G7, if you're not aware, it stands for a group of 7. It's just 7 large economies around the world. And so without further ado, let's look at 12 things that you need to know about this proposed tax. Number 1, wealth goes where it's treated best. And here's what I mean by that. Incentives matter. And the more you punish and penalize wealth and prosperity, the less of that you will see. Specifically something like profits. Because profits are simply oxygen for a business. That's all profits are. And if you are incentivized to not have profits, that means you won't have any stashed away for a rainy day in the years that are harder. In the years where you don't have profits. You'll be in trouble. Now in the West, profits are punished. And increasingly so. This is one of the reasons why zombie companies are at an all-time high. It's another reason why corporate debt is at an all-time high, because debt is tax-free income. And so if you need income, you don't have to worry about increasing your revenue to the point where you have excess profits. All you need to do is get debt, because that's not punished. In fact, it's incentivized through inflation. And like I mentioned, profits are like oxygen for business, which means that when you get to those hard years and you don't have any profits, any past profits that you've been able to stash away, that means those hard times are putting you at risk of going out of business. And when that happens to economy, when there's a massive amount of giant corporations who have no profits, and we hit a bad year like, 2020, it turns the entire economy into too big to fail, and it gives the government reason to step in and take control and rescue the economy. I repeat this quote all the time, but Charlie Munger said, "Show me the incentives and I'll show the outcome." If you punish profits, you'll see less of them. And eventually what that turns into is the wealth just leaves. Number 2, this proposed tax deal targets right now specifically the largest and most profitable multinational corporations. This means that if the end result is similar at all to what's being talked about right now, it means that profits will disappear by design. This is why many people are complaining about the details, because the cutoff is a 10% profit margin. So as long as a corporation looks at this and says, hey, well, we could, if we wanted to, we could book 20% in profits this year, or we could just spend half of our profits and only come out with a 10 or a 9% profit. We don't have to pay any taxes. We can either give that money back to our business and reinvest in ourselves, spend that money on marketing, raise some people's salaries, especially the executives, or we could just give that away to the government. What do you think they're going to choose? Spend the money on something that they get to do something with, or write a check to a government? This is because businesses, I've said this many times, businesses pay taxes on profits, they don't pay taxes on revenue. Whereas individuals, employees, you pay taxes on revenue, not profits. So you make $100,000 this year, you're gonna pay taxes on the full $100,000, and then whatever's left over after paying your taxes, let's say you've got 60 left over, you can spend that on whatever you want. Businesses are the exact opposite. If a business makes $100 million, they can spend as much of the $100 million as they want, and then let's say they've got $1 million left over, that's their profit, that's what they're going to pay taxes on. if you were being treated this way, you would bring home $100,000 in your paycheck, and if you spent all that money on groceries and rent and your car payment and whatever else you spend money on, and your savings account at the end of the year, you've built up a surplus of, let's say, $5,000, you'd only be taxed on $5,000 at the end of the year. Individuals or employees specifically, and businesses are taxed completely differently. And so as a business, it's very easy to not be taxed. All you have to do is spend your money, which means that if you're an employee, by the way, this is your sign to start a side hustle, to become a contractor, to start that business. The tax code is far more friendly to you as an individual if you are running a business versus earning W-2 wages. All right, and the third thing that you need to know, this tax deal creates more and stronger incentives for leaving. Now, the largest corporations may not have any way around this, depending on how airtight this becomes. But certainly, high net worth, ultra high net worth, small business owners will definitely have options. And basically, any country that jumps on board with this is simply eating the seeds of the wealth of future generations instead of allowing them to be planted. Number 4, at least some of this plan will completely backfire. And one of the surest signs of this being the case is that representatives from Google, Amazon, Facebook, and nonprofit groups that represent large tech companies are all praising and in support of this tax deal, simply because large corporations have the money and the influence to have input on how the details actually work themselves out, which means they have the ability to give themselves an inherent advantage in the way these things are built. It gives them more of an ability to close the door behind them and make competitive competition from smaller companies way less of a threat. It's like Thor and his hammer. When Odin wanted to take away Thor's power, he took away his hammer. He didn't make the hammer stronger. If we want to decrease the power of corporations who wield governments as their hammer, that's their source of power, it's preposterous to think that strengthening their source of power would hurt them. If you want to decrease corporate power, you need to take away or at least decrease the power of the weapon or the power that they control, which is their hammer is the governments. All right, the fifth thing that you need to know, what will this do to actual tax revenue for governments? Basically nothing. It is estimated that in the United States, this change, if put in place around the world, would result in an increase of $500 billion over the course of 10 years. In April alone, the federal tax receipts were $439 billion in 1 month. And they're saying if they put this into effect, the difference in tax revenue will increase by $500 billion over 10 years. That's nothing. And that's a best case scenario, assuming that the changes in rules and laws and incentives don't result in a change in any behavior, which is, again, preposterous, because different incentives cause different behaviors. This is like when the British Empire wanted to rid India of snakes. They released a bounty on the heads of snakes, and they said, hey, if you turn in a dead snake, we'll give you money for it. What did this do? Well, it didn't decrease the snake population. Smartly, Indians started breeding snakes. You breed snakes, you kill them, you go turn them in for money. It became insanely profitable to breed and kill snakes, resulting in a much worse and larger snake problem than before they offered the incentives for the dead snakes. So the result of this tax bill would be that profits disappear, and the added tax revenues for governments will be nowhere near expectations. Number 6, this could potentially set a very dangerous precedent, specifically with how they're trying to target companies like Amazon, which Amazon is a massive company. They make a ton of money in terms of revenue, very little money in terms of profits though. Again, because the way that the tax laws are designed around the world is that businesses pay taxes on profits, not revenue. So Amazon doesn't like to pay taxes. They just throw all that money back into their business. This is why Amazon is under the 10% limit. So in its current form, that Amazon wouldn't really be a target for these new taxes because they're not over the threshold simply because of what their profit margin is. But some of the proposals are kind of scary here because certain segments of Amazon's business are very profitable. So Amazon is one company and they have certain segments of their business that are pretty profitable, and they use the extra money from, let's say AWS, which is Amazon Web Services. They use the profits from that to fund some of the shortfalls in other areas of their company where they're maybe losing money, maybe spend it on research, maybe spend it on development, building out infrastructure, hiring products, whatever it is. And so their net, overall, their net profits are under 10%, but certain areas of their business do pretty well. Well, some people are proposing that since certain segments of their business are profitable, they can tax specifically those segments. This would be like if you have two jobs. Let's say you're a contractor, and then you also have your normal job. And together, your two jobs net you, let's say, $60,000 a year. Now, your contractor work, let's say, makes up $10,000 of that. Very small amount compared to your regular job, but per hour, let's say you get paid a lot. Let's say you get paid, $300 an hour versus your normal $25 an hour for your regular job. This would be like the government coming to you and saying, hey, you've got a job that makes $300 an hour. On an annualized basis, that's over $600,000 a year. So we're gonna tax you on that money as if you're making $624,000 a year. And you're like, wait, I don't actually work full time at that. That's just part of my income. It doesn't matter that per hour it's way more. Altogether, I'm still only making 60. And they say, we don't care. We don't like it when people make that much. It's the exact same thing happening here. Amazon's whole business altogether, they book very few profits. They have some things that earn a lot, and then they pay for the shortfalls in the other areas with those extra profits. But overall, as a company, their profits are very small. So it opens up a dangerous precedent to be able to target specific areas and segments within businesses, basically allowing governments to tax targeted revenue rather than profits. Now, the seventh thing you need to know is that this will not stop with the largest and most profitable multinational corporations. And here's why. The recurring revenue that governments get from this change, if it goes into effect, will drop every year because corporations are simply going to be working on workarounds and figuring out ways to not have to pay as much. But the precedent will be set. Just like in 1913 when the federal income tax in the United States was started for the first time. Keep in mind, we didn't have a federal income tax before 1913. Country operated just fine. But they started a federal income tax in 1913 and promised it's only for the top 1% of income earners, and of those top 1%, we're only going to tax them 1% of their income. Well, as soon as kleptocrats get used to their hand in the honeypot and then the honeypot runs dry, they will forever demand more and more. Precedent will be set, and history shows it will simply just keep on moving down the line. And already there are plenty of people calling for higher than 15%. Biden said 21%. Some are saying this is a good first step, but we need it to be at least 25%. The more the better. So they're already laying the groundwork for this. Now, number 8, the 8th thing you need to know is that the US does not want to move forward with this until they know for sure that they're getting buy-in from most other countries. And here's why. You can't increase your punishment and how much you penalize wealth and prosperity unless you can guarantee the grass is not greener on the other side. This is why many countries like Ireland, many smaller countries like Ireland are very opposed to this. Being welcoming to wealth and prosperity is one of their only competitive advantages. This means that the more countries that sign up for punishing wealth, it creates even stronger incentives for at least one country to buck the trend, go their own way, and say, hey, we're a safe haven here. Come as you please. Number 9, one side effect of this could be that there's a drastic loss in jobs. Because if there is no way around the higher costs from an increase in taxes, one way to offset the higher costs in taxes is to offshore more jobs to countries where labor is cheaper. Now, with equal skills, you've got a copywriter in the Philippines and you've got a copywriter in San Francisco. You've got a developer in India, you've got a developer in Palo Alto. With equal skills, there is no inherent difference between the labor of somebody in Southeast Asia versus Southern California. And especially after last year, more and more companies are far more comfortable than they've ever been with going remote. So a loss of jobs to countries where labor is much cheaper would be a very easy way to offset the higher costs from taxes. Number 10, an additional side effect from this could be higher costs of products and services. Again, another way to offset the higher costs is to simply pass that along to your consumers, pass that along to your customers in the form of higher prices for your goods. This is the same reason why property tax increases always result in higher rents for renters. You just pass that puppy right on through. We're coming up on the final stretch here. We got 2 left. We're on number 11. The real reason behind this is not increased revenue, as we've seen, because it really won't increase the bottom line for governments. And it's really not about playing fair with the rest of the world. This is mostly about retribution and condemnation of wealth and contempt for those who actually produce value for society. Bono said that low tax rates gave Ireland the only prosperity it's ever known. A global minimum tax would effectively punish small countries who are welcoming to wealth, who welcome freedom, who welcome prosperity, and completely take away the advantages that they've given themselves. Because low taxes, among many other things, it attracts wealth, which is far better for individual freedom, prosperity, and well-being than filling up the government's coffers. And so when Janet Yellen comes out and says that this would end the race to the bottom in taxation and ensure fairness for the middle class and working people in the US and around the world, it is outright deception and completely untrue. Because central planners, kleptocrats, bureaucrats, politicians, the ivory tower elites think that they have the right, think that they deserve to take what others have rightfully produced themselves. They want to increase their power and swing that hammer of their monopoly on violence to squeeze more and more from everyone as much as they can. All while condemning those who have produced the very thing that they're trying to take simply by providing the world with what it wants and what it needs, for which individuals freely choose to award them profits by buying their stuff. So it's not about ensuring fairness for families and individuals around the world. It's about strengthening the financial border walls so that you can punish wealth and it has nowhere to flee. And finally, number 12, what are the odds of this actually happening? Well, G7 is in. G20, which is the group of 20, which is the meeting is in July, it's next month, not so much. That's going to be a harder sell. And then after that, buy-in from 139 countries is going to have to be sought. Further than that, there is Republican opposition in Congress in the United States, while at the same time Democrats have a very slim majority. And Republicans have been outspokenly against higher taxes such as this one. So in my estimation, fortunately, this seems pretty unlikely. However, I do think something will be put into place that will basically just be lip service for this. There won't be any substance behind it. It won't result in any large tax revenue increases for governments, especially the large corporations will still have all the abilities they have today, maybe through different loopholes in order to pay in taxes what they want to pay. And some of the unforeseen consequences will be that it'll just be harder for small to medium-sized businesses to bring competition to the table. But at the same time, and here's the silver lining, it creates stronger and stronger incentives for any country around the world who wants to say, hey, we like you. We don't punish prosperity here. Come on in and we'll treat you well. So that those who want to can go where prosperity is welcomed and not penalized or condemned. 3 book recommendations if you want to go very deep into the topics that I talked about on this video. Number 1, Tax-Free Wealth by Tom Wheelwright. I recommend this book all the time. It's amazing. Number 2, How Innovation Works and Why It Flourishes in Freedom by Matt Ridley. Again, one of my favorite books. And number 3, Nomad Capitalist by Andrew Henderson, which answers the question of whether the grass is actually greener anywhere else and how you can get there. If you enjoyed the video, please do me a big favor and hit that subscribe button and pass the video along to somebody who you think would be helpful for as well. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.